Inflation is a major consideration when it comes to the performance of investment portfolios. Due to the convergence of different economic factors, including scarcity of workers now, pent-up demand, and insufficient supply, inflation recently hit a 30-year high. My guest is Greg Brown with West Coast Financial Services in Gilbert, Arizona. Greg, good to talk with you. What strategies can investors use right now to offset the effects of inflation?
Well, I think the first thing you have to look at is what is your performance that you're getting on your current portfolio. What we are seeing a lot is retirees are sitting on a lot of cash or fixed income type investments that are yielding maybe 1% at best. It's really important to get that money working for you. It's important to be able to make 3 to 5% to be able to stay with inflation on the safe side of the portfolio. Unfortunately, the equity markets have been favorable, so if you are in the market, obviously your returns have been greater than that, so that has been a good effect.
So Greg, the bond market typically doesn't do well with inflation. What alternatives are there?
You know, bonds are an interesting vehicle. Of course, a lot of people don't realize what happens with interest rates. There's an inverse relationship between the values of bonds and interest rates. So as rates go up, bonds actually go down. Now, we've been in a very strong bull bond market over the last 10 years or more, so bonds have performed nicely, but we're really at an inflection point now to where when rates do start going up, bonds will lose value. So it's interesting because there's been a lot of research done on the typical stock bond portfolio and what the yield going forward may look like, and it doesn't look very good. So there are some alternative investments that we're seeing perform much better than bonds, and that has to do with some of our guarantee index products that are tied to market indexes. So those are some really nice vehicles that can stay with inflation, but now we don't have to worry about the drop in value that you will see in a typical bond portfolio.
Finally, how do you address inflation for retirees on a fixed income?
You know, that's a really good question because the concern is, will my money last my entire life? And will the effect of inflation eat away my pension, my Social Security, to where I may not have enough money to live? Again, it really comes down to making sure those assets are growing properly. I think another concern is where some of the mistakes we're seeing is retirees are taking a lot of that money they need to keep protected and investing it in the stock market where there's a lot of risk. So I think right now is a really important time to assess an overall portfolio to make sure there's not too much risk there because, of course, the markets do give us the higher returns. But overall, it's developing a portfolio that can be averaging 3 to 7%, on the low end. If you can be doing that in a portfolio, then you can continue to take more money out of that to support income.
That's Greg Brown with West Coast Financial Services in Gilbert, Arizona. This is Retirement News Online. Thanks for watching.